e.l.f. Beauty is an interesting growth stock to consider right now. The company's share prices have crashed in recent weeks as a result of a few factors, most notably the impacts that tariffs could have on the company's business, and then management gave an outlook for the rest of its fiscal year 2025 that disappointed stock market investors. So, what's a fair price? What's the fair value of e.l.f. Beauty stock? Is it undervalued, fairly valued, or overvalued right now? That's the question I'll answer in this video by doing a discounted cash flow valuation on e.l.f. Beauty to come to the conclusion of what a fair price is for this growth business.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So I won't make you wait till the end of the video for my intrinsic value per share. That number is right here in the middle, $41.21, which compares unfavorably to the $75 stock price for e.l.f. Beauty. But let me walk you through my calculations for how I arrived at this $41 intrinsic value per share, so you can decide for yourself if this is an accurate valuation, if I'm underestimating something for e.l.f. Beauty, or if indeed it is overvalued. So let's start with the cash flow forecast. According to Wall Street analysts that are following e.l.f. Beauty, they expect the company's free cash flows to decline considerably over the next few years. They expect the company's actually for the next year and then rebound after that, I should say. My apologies. So they expect the company's free cash flow to fall from 2024 to 4 million in 2025, 40 million in 2025, before rebounding to 210 million in 2026 and 190 million in 2029. The volatility in the free cash flow likely a result of the impacts of tariffs on its business, since most of its manufacturing happens in China and the Trump administration recently implemented tariffs on products manufactured in China, and that's just the beginning. There is concerns that these tariffs could rise if the current administration is not happy with how China responds to the tariffs that the United States has placed on its products. So I'm forecasting that after 2029, e.l.f. Beauty will reaccelerate its free cash flows and that it'll rise from 190 million all the way up to 345 million in 2034. And then starting 2035, I'm going to calculate my terminal value for e.l.f. Beauty's free cash flows expected between that point in time and the very long term, and that terminal value is 4.8 billion in 2034. So then I'm going to take all of those cash flows and bring them back to today to find the present value, and that value is $2.615 billion. The cost of capital that I used, the discount rate, is 12.5%, 12.6% to be precise. I gave e.l.f. Beauty a cost of debt of 7.5%, and I calculated a cost of equity using the capital asset pricing model of 13.14%. e.l.f. Beauty's beta is 1.44, the risk-free rate is 4.5%, and the market risk premium is 6%. Its market cap is 4.985 billion, and it has total debt of about 301 million. So given that structure, I gave them a target capital structure of 10% debt and 90% equity. So since the value of operations came in at 2.6 billion, we still need to add the company's cash balance and subtract the debt, and that will bring us to the value of equity of $2.4 billion. But we want to know the price per share, so we divide by the number of shares outstanding, and that's how I arrive at the intrinsic value per share for e.l.f. Beauty at $41.21, which is considerably below the current market price of $75.54. I mentioned earlier that e.l.f. Beauty's beta is 1.44. This is a measure of risk for a business in how it compares to the price movements of the S&P 500 index. But I want to share with you a couple of scenarios that could make e.l.f. Beauty stock worth a little bit more. If the beta should be lower, if you think the beta should be lower and you want to adjust it lower, I can do that here. And I've created a model that will update as I change the beta. So I'm going to change the beta lower to 1.25. And that would mean that the share price goes up to $488.91 intrinsic value. Still below the current market price of $75.54. But what if the beta is only 1? Well, that would mean that the stock price could be worth $63.75. But still, that would be below the current market price of $75.54. So even if I were to adjust the beta lower for e.l.f. Beauty, the share price, the intrinsic value would increase, to be sure, as it does for any business. When you lower the beta, the intrinsic value per share increases because the beta measures risk, and risk is incorporated in the discount rate to discount the future free cash flows. And so when you lower the beta, it increases the value of operations, it increases the value of all of those future free cash flows, and that creates a higher intrinsic value per share calculation. But even after I do that for e.l.f. Beauty, it still shows that the shares are overvalued at current prices. But I'm curious to hear what you think. Do you think that the beta should be lower? Do you think the beta is correct according to Yahoo Finance and its historical average? Do you think I've underestimated the free cash flows for e.l.f. Beauty over these next few years? Do you think the market is overly concerned about the tariff threat to e.l.f. Beauty's business? The company has done a great job at capturing market share, but it's also spending significant sums on marketing activities in order to do so. The company is notoriously aggressive in their sales and marketing spending to capture market share. So I'd be curious to hear your thoughts. Of course, this is for entertainment and informational purposes only. You should do your own due diligence before making a decision on e.l.f. Beauty stock, on whether or not to buy, hold, or sell this business. This video should just be one of the many things you do in your research process before coming to a conclusion on this growth stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.